Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So we are going to have a session trying to understand the current key events influencing the markets. And once we are done with this, hopefully everyone will understand where the opportunities lie. So before I make any progress, I would like to do a mic test. So if you can hear me clearly, kindly type hi on the live comment section. And this will confirm that everything is working just fine. So hello, Miriam, and thank you for your response. Hello, Jeremiah. Thank you, guys. So let's get things started. So I'll be starting with the key events that happened this evening on the economic calendar. So first things first, let me try and share my screen. So among the key highlights is one, US PCE prices slow. And PCE is personal consumption expenditures, which were expected to be dropping during the data released this evening. So the PCE price index in the US remained unchanged in October, the weakest reading since July 2022, after a 0.4% rise in both September as well as August, and defying market expectations of a 0.1% increase. Also, the annual rate cooled to 3%, lowest since March 2021. Meanwhile, the core gauge, excluding food and energy prices, rose 0.2% for the month and 3.5% on a year-over-year basis, slowing down as well, but in line with the consensus estimates. So the other key highlight for the day has been Eurozone inflation rate cools more than expected. So the inflation rate in the Euro area declined to 2.4% year on year in November 2023, reaching its lowest level since July 2021 and falling. The other key highlight is WTI crude oil swings on OPEC Plus meeting. So WTI crude futures swung between gains and losses to trade around $78 a barrel on Thursday after OPEC Plus reached a preliminary agreement. Then on the housing side, US pending home sales hit a record low. So pending home sales in the US declined 1.5% month over month in October 2023, pushing the index to 71.4, the lowest since records began. So we also saw US stocks are set for strong November gain, save for this evening. We are seeing a big sell-off happening in both the Nasdaq and the S&P 500, but somehow the Dow Jones Industrial Index has defied the bearishness and is skyrocketing higher. So US personal spending rises the least in 5 months. So personal spending in the US rose by 0.2% from a month earlier in October 2023, following a 0.7% increase in September. And lastly, US jobless claims rise less than expected. So the number of Americans filing for unemployment insurance rose by 7,000 to 218,000 in the week ending November 25th. So yes, this was an increase in the number of people claiming for unemployment insurance for the first time, but at the same time, it missed expectations. So going forward, the most important data that we are looking forward to is one, Australia Judo Bank manufacturing PMI, then Japanese unemployment rate. This is from 1 a.m. and 2:30 a.m. tomorrow. Then we look at South Korea exports year over year, South Korea S&P Global manufacturing PMI, and of course, Japan Jibun Bank manufacturing PMI final. So a majority of the news that we are expecting for the week has already happened, and now it's time to try and understand how this impacts the markets going forward. So just trying to look for an article I've just checked before starting the webinar. So inflation continued to cool in October, according to the Federal Reserve's favorite price index. So the personal consumption expenditures index grew 3% year over year for the month, down from 3.4% in September, and in line with expectations. Core PCE, which excludes volatile food and energy categories, grew 3.5% from 3.7% in the previous month. So this is also in line with what economists surveyed by Bloomberg had expected. So with both core CPI and core PCE both headed down lower, remember the Fed target is 2%. So in this case, it basically means that inflation is moving in the right direction as expected. And in this case, there is this overall expectation that we should be seeing Fed holding interest rates steady. And once we get into next year, potentially within the first half, we might have one or two potential rate cuts. So that is news that have been prevailing in the markets and influencing the movement of currencies as well as indices and commodities. And from what we are seeing, the Nasdaq 100 was moving along this channel. So it managed to make a big spike yesterday in the evening before changing direction. And then today it was largely ranging, and this range took quite a period. So eventually we had this break happening in the afternoon, and all we have seen is a big sell-off going throughout the rest of the New York session. So clearly we have had 4 consecutive hours of the Nasdaq continuing to sell. And then from a technical perspective, we know that whenever you have such a break, if the market doesn't go back to retest this area, then the potential is that the market keeps going down and gets to the previous low or the base of the pattern. So there's still more room for downside momentum in the Nasdaq, potentially getting to 15,738. So we are seeing something similar happening with the S&P 500. So the break is not as that big, but in the last 1 hour, we saw this clean break, a candlestick opening and closing below the trend line, which implies that we have a clean break. And now the expectation is that the market continues pushing further downwards, and we could be seeing the market headed all the way down and potentially getting to this area here. So for the US 30 or the Dow Jones, there was a clean break towards the upper side, and this is defying all selling indicators. So in this case, it seems more of a liquidity grab of the previous high. So the previous high that we have seen in the Dow Jones was just right here, around 35,695. And this means that there could have been some good liquidity hiding around this area. And what we are seeing is the market gunning for that area. So at some point, we should be expecting to see the Dow Jones following suit or following the other US equity indices. So for now, let's be patient and wait for the signs of bearish entry. So on the commodities side, we had this pattern where gold was basically rising along this channel. Eventually, it got above 2,000. And yesterday, we saw what I would describe as the 6-month high in gold prices. So we got to this high around 2051. And then since then, we have been seeing price trading in a triangle. So the triangle has lasted yesterday and then today in the morning before the market made a breakout towards the lower side, pulled back, retested the trend line before going further downwards. And now we are seeing the market struggling to go further downwards. So from the 1-hour chart, you can see that the market is struggling to move further back downwards. So in this case, it makes a lot of sense that the triangle has been broken to eliminate the previous analysis and then work with what we have. So from what we have now, if you go to the 15-minute chart, zoom this out, then you can see it's an extended consolidation. So the extended consolidation is taking shape along this line. And of course, on the lower side, it's also taking shape along this other line. So now we track a completely different form of breakout, which is in the shape of a flag. So in this case, we track these two trend lines looking for some point where we'll have a breakout, which would represent yet another trading opportunity. So in this case, monitoring these two trend lines will give us an idea of the direction that the price of gold is taking. But then it's also very important to notice that from the weekly chart, this is the highest we have seen in the price of gold, somewhere around 2085, and this was earlier this year. So there's a likelihood that gold will be pushing even higher, trying to test that level. So as per now, we are seeing this kind of flag formation. So I would be very more interested very much interested to see what happens when the market gets here. If there's a clean break, then the potential for another leg could be playing out, something similar to the previous leg that happened here. So going on to the oil prices, we know that today was the official OPEC meeting day. So there has been a lot of speculation in oil, and the better part of the week has largely been bullish. So seeing some upside momentum here and here, and of course yesterday. Today we opened with a very strong bullish market, and the market went all the way to our target. So we had set a target here, the previous support, which is now turned into a resistance. So in the morning snapshot, we discussed that a break above this area would mean that the market continues to rally and eventually gets to 84.466. So eventually the target was hit, and after this, you can see the big sell-off that happened later after that. So now we are seeing the market bouncing from this lower trend line, and perhaps the market will remain within this pattern. So this afternoon, we have seen some leakages coming from the members who are attending the OPEC Plus meeting. And some of these leakages are basically to the press, basically talking about the key developments that have happened over the meeting. So one of the key highlights, I'll try to track them. OPEC may meet again before the end of the year, and this is coming from the Algeria Energy Minister. Saudi Arabia to cut oil output by 1 million barrels per day, and Russia by 0.5 million barrels per day, and others to cut more. So in this case, we are expecting to see some further oil output cuts from the OPEC countries. So another key highlight that came in from the meeting was that correspondent tweets breaking Brazil will join the OPEC Plus nations. So we will be expecting to see Brazil joining the OPEC Plus nations, and that will be part of further expansion in the oil cartel. And this would mean that they control even more share of the global oil supply. So those are some of the key highlights. Then for US natural gas storage, it came in at 10 billion versus minus 7 billion the previous week. And this basically means that the storage is increasing in the US, which is bearish for oil prices. So we also saw yesterday oil prices, crude oil inventories increasing larger than expected. This was on Wednesday in the evening. So crude oil inventories came in at 1.6 million barrels, which was higher than the expectation of negative 0.1 million, meaning that the US is stockpiling even more oil inventories, leading to higher supply of oil, which has the overall impact of weakening oil prices. So while on one side, the non-OPEC countries are basically expanding their production, OPEC countries are cutting their production, and this seems to be cancelling out. So that may explain why we have oil consolidating in a wider pattern. So when you go back to your charts and you look at oil prices, you'll notice that since around 14th of November, we have had these huge swings happening across board, but the overall direction seems to be just a sideways momentum. So despite the break that happened early in the morning and the market getting right back into pattern, there seems to be an overall push prices lower. So in this case, I'm going to go with a bullish momentum, especially after all this bearish momentum. So there is still a likelihood that we'll be seeing some further upside potential in oil prices. So right now we are facing a market that was strongly bearish, but then the current candlestick will basically prove whether there is support around this area, depending on how the candlestick closes at the top of the hour. So European equity indices have been largely bullish. So remember, in the morning we were tracking this particular pattern. There was a false break on the lower side, and then the market happened to rally all the way back up. And this has been quite a consistent theme. So for Euro 50 stock market index, we saw the market finding resistance here, dropping for like 2 hours and then getting back up to the resistance and breaching it truly this time, which means that now we have already breached that level, and there's still some likelihood we will continue seeing some further upwards pressure on European equity indices. So for the For the UK 100, we had a 3-day pattern, market finding support here and rallying higher. Second time, market going down, finding support and rallying higher. And then today in the morning, we discussed this, that if the market is rejected and doesn't break the 74.03 price level, we could be seeing the market moving back upwards. So what happened is that there was a very strong candlestick downwards, but then the following hour, there was a very strong reversal and an engulfing pattern, leading to some further upside momentum before we started erasing gains this evening. So in this case, there seems to be a very strong support around 74.03, which means that we should be looking for opportunities on the buy side. So in this case, if we see signs of a bullish continuation, then it makes more sense to look for positions on the buy side for the FTSE 100. So the dollar index has been pretty strong. This is something we had discussed early in the morning. So after making some impressive rally yesterday, today has been even more impressive. And with a very strong dollar, we have seen key trends happening in the markets. So dollar strengthening against the yen, making a strong rally. And now you can see yesterday's high has already been beaten. And of course, yesterday's low has also been beaten. So we are having a higher high and higher low environment, which means that we could be ending the week on a high if this bullishness continues. So for pound USD, we are seeing this breakout happening. So after several weeks of the pound being very strong against the US dollar, later we saw the market forming this pattern here. I remember drawing it on the 15 minutes chart. So if you zoom out, this was the part. Then the market happened to break, went ahead and got to our support level. And this is the area we were tracking to see if there's a break. So the break happened later this afternoon. Market pulled back and is now continuing in the direction of the break, which means that now we could be seeing the pound continue to lose to the dollar, and the potential target remains 1.25046. So for Euro USD, we were seeing the market trading within this pattern here. So oscillating up and down, up and down. If you go to the forward chart, this is how it looks like. So this was a trend line that was holding since February. Then the market kept finding it as support. And upon breaking that area, it has rallied all the way up to the same level. So in this case, there's a good likelihood that we will be seeing some further downside momentum after hitting that particular resistance. So from the 1-hour chart, this is how it looks like. So we had a trend line here with about, I would say, 3 hits. We have one. We have the second price action point here. We have the third one here. And now the market is approaching the same level yet again. So this remains a target. So for anyone who entered short selling positions, this might be a nice place to make an exit. But then the persons who are not yet in the trade, this is the area we are observing to look for a potential entry. So a clean break of this area would mean we continue selling. And of course, if the euro finds support, then we look for bullish positions. So in this case, I expect some further break, especially judging by the strength of the dollar. And this would mean that price breaks and moves lower. And the base of the pattern is all the way down. So we could be seeing the Euro USD dropping further downwards to 1.08280. So as for USD CAD, we are seeing this noise happening. I remember in the morning we discussed the yellow zone, which was acting as the resistance yesterday. So as the market was bullish, we decided to look for signs of break or reversal in this area. And I think the red candlestick was very telling. And after the red candlestick, you can see the market continued moving downwards. And then now it has reversed, meaning that there is a lot of noise in this chart. So on one side, we have a dollar that is really strengthening. And of course, for oil markets, they have also been strengthening, save for this afternoon where we are seeing some weakness happening in oil prices. So in this case, we don't have much. For me, it looks more like a sideways momentum. And in a market such as this one forming sideways momentum, it makes more sense to track the sideways momentum and identify the direction of the break. So within the last 2 days, yesterday and today, we are basically following this path. So in this case, we know that at some point, there will be some form of break. And in that case, it will be much better to look for opportunities. So for audio USD, we had this particular trend line acting as support. So in the afternoon hours, it was broken. Market found support here, rallied back up, and now is headed down lower. And now the original target remains of 0.65284. So in this case, after the breaking of this particular trend line, then we look at this area here as an area of interest with potential support. So in this case, with a strong dollar, there's a likelihood we could be seeing the price going down to this area. So it was initially acting as support, previously as resistance, and now the market may be headed down here. So as for Bitcoin, it found resistance around 38,396. So this was the high price that we saw yesterday, somewhere around here. So since then, price has been moving further back downwards. And as you can see, it remains within this pattern, which means that there's a good likelihood we'll be seeing some further downside. And this downside would continue projecting. So in this case, this is what we are looking at, a potential drop from this high all the way down to around 36,650. So as for New Zealand USD, we are seeing this noisy price action, which basically screams of some form of consolidation. So we don't have much to go by except these market finding resistance here between yesterday and today. And of course, the support is also forming some form of trend line here. So in this case, we be patient and remain on the lookout for a potential break. So with this kind of price action happening, then you can either choose to participate inside the pattern and trade the edges of the two trend lines, or be patient and wait for a breakout, which would be determining the direction of the market as we go into next week. So for now, it remains something that you might want to avoid, especially considering that this morning we were looking for the market going downwards, finding support along this area, and then bouncing and moving higher. So yes, this happened. You can see the red candlestick and the rejection of lower prices. So market rallied, found resistance, and is now moving back downwards. And now we don't have a setup yet. So for USD CHF, this is what we had. This bearish channel, market broke and retested, continues moving further downwards. But then from what we are seeing in the last 1 hour, the market seems to have found some support, which means that our original theme remains, where we see the market retesting this price level of 0.87803. And this is by simply betting on a strong dollar as we approach the last day of trading of the week. And of course, the last day of trading of the month is today. So from tomorrow, we officially enter the Christmas period. So during Christmas period, we tend to see much lower volatility in currencies and much higher volatility in equities. So in this case, I'll be putting out of more effort and analysis in discussing these equities. So as we approach the end of the day, I think a very key and important trend to observe is this breakout happening in the NASDAQ, which has been a big winner for the better part of the year as a result of the AI boom. So in this case, this clean break here might mean we get to see some further strong downside momentum, and this could give you some good returns if played properly. So that's the end of my presentation. So I'm trying to check if you guys have questions. So hi Malombe, Vinod, and Awin Serota. Hi Yusuf. Today experienced emotions while trading Euro USD and the pound. I was short at first and later on. The market was giving me mixed reactions. If you ever happen to have such emotions, it's better off to just go outside and touch some grass. And this is basically saying you just stop trading and go breathe and just let the emotional energy pass before you come back and execute another trade. Sometimes it's even easier and safer to just close your machine, go do something else, and approach the markets on the following day. So hi, Ruthie. Hi, Phineas and Irene. Why did the dollar gain despite inflation getting back to 0.2% and the unemployment rate to 18K as expected? Had the dollar bottomed out or it was purely technical analysis doing its thing? So even me, I was very surprised seeing the PCE price index coming in weaker than expected, year on year dropping to 3.0%. It basically means that the Fed is winning. And if the Fed is winning, there's no more rate hikes coming. But then, judging from what we have been seeing with price action over the last 3 weeks, the dollar index has been weakening day in, day out. So in this case, we were basically looking at a case of what we describe as buy the rumor, sell the news. Sort of people were expecting that the PCE price index data would come weaker than expected. And in that case, they basically continued shorting the dollar. And once the news was announced, in this case, we saw the opposite reaction. So sometimes the markets will be ahead of the news. And in that case, once the news is announced, you see an opposite reaction. And that's perfectly normal. So instead of overly relying on the news and the analysis that we do, technical analysis kind of reigns supreme, mainly because you're trading what you're seeing. So if price is telling you that it's going down, then you don't fight that price, you continue trading in that direction. I'm still bullish on gold. Me too. I'm still very bullish on gold. So despite what we are seeing here as the pullback, so that's why I mentioned that now we are extending our analysis into this flag formation, where if this is our flagpole, the two trend lines define our flag. So the area of interest remains around 2043. So this is the area we are looking to see. If gold breaks here, then it presents an opportunity to move even higher beyond 2051 and to the all-time high. Do you stay on the charts to make observations, or how do you monitor your trades? I check my trades from time to time. I'm not consistently looking at the charts. So most of the time, you'll find me doing analyses on various websites. I spend a lot of time on Twitter, basically following financial Twitter. But then I monitor my trades bit by bit. So I won't be looking at the charts all day if I'm holding onto a trade all day. So I just trust that my analysis is correct. And if I'm wrong, I've done my risk management properly. So I know the maximum I can lose in a trade. So I'm not worried about the market making sudden movements. So last point is silver. Silver is something we haven't checked in a while. So similar to gold, we know that the two assets are kind of correlated. We are seeing a very strong momentum upwards. We have a trend line break here. So it's a chart that I haven't checked in quite a period, but there seems to be a consistent theme here. So from technical analysis, I can see this happening. So you also need to do some analysis on silver bugs. If you are a good fan of Twitter or X, just check on a very popular trend called silver squeeze. Then you'll see the momentum. So also, it's important to notice the number of days we are seeing here. So from the daily chart, we are looking at 6 consecutive days of gains in silver prices, which means that there is a very strong momentum currently happening. So also important to check is previous support and resistance points. So in this case, if I go to the daily chart and I look at the price action levels, I'll notice that there is a major resistance just about $26.086 per ounce of silver. Then there's this. which was clearly acting as a resistance at some point back here, and then at some recent past. So knowing this, and this is the daily chart, you can see that there's a strong momentum upwards. So remember what you have said. If the channel is moving this way, and there's a breakout here, then the potential target remains the top of the pattern, which is 26.086. So on the forward chart, we have identified that the current price level is a major resistance point. So when the price got to the resistance, notice how it pulled back, got to the same level again, pulled back, and this is that attempt to break that level. So in this case, if I was trading silver on the 1 hour chart, I would be monitoring this area to see if there is a potential for a break. So in this case, I would be observing this resistance here and try to understand if there is a clean break. Of course, the support here. And if there's a clean break, then it would mean some further upside momentum. So on the forward chart, it seems like a continuation pattern. So let's observe the next couple of hours to see if there's some further break outside. So that's it for the day. Thank you very much, guys. I hope I've answered every one of the questions that you've raised. So also remember, there's a new episode of the Bullish Banter podcast. It's available on the FX Pesa YouTube. So if you go to, say, YouTube, show you this. You search for FX Pesa. You go to the channel, then among the menu, just click on podcasts. You'll see the Bullish Banter podcast. And this is the most recent episode, the borderless parameters of investment. So if you want to dig in, I'll be sharing a link with you guys so that you can listen on your free time, especially as you approach the weekend. So thank you very much, guys, and I hope to see you on the next one.